Okay, so in this video, I want to explain to you how you can actually apply some basic trade management to your trades so you don't give back too much open profits, right? Say for example, this one over here, let's say you've gone long at support over here and you have a target at this highs over here, right? So you can see what happened that in this trade, the market has actually went quite a bit in your favor. Then it collapsed all the way lower, right? So you did not hit your target, but hit your stop loss. And I'm sure you don't want this type of event to occur to you because it can be psychologically quite painful to watch your trades, right? Almost 80% towards your target profit before reversing back all the way and hit your stop loss. So what you can do is actually employ very basic trade management. So you actually protect your open profits as the market moves in your favor, right? So let me explain how you can do this. So let's say for whatever reason, right, you went long when the market has actually closed higher, this candle, right? Let's not worry about the trade setup at this point in time, right? So the market has went in your favor over here, right? So how do you trail your stop loss, right? You can trail your stop loss, right, below the previous candle low. So this is the previous candle and this is the low. So let's get this line out, right? So this is where your stop loss will be, okay? So I won't recommend just putting an order into your platform, right? Because often what happens is that the market can spike down, touch your level, and then close higher. So I usually wait for a close below this level before exiting the trade, okay? So you can see over here, right, the market right now has closed slightly against us. So this is the previous candle right now. So let's shift our stop loss higher, okay? So right now the candle has formed somewhat of an indecision candle, right? So this is the previous candle, the red one. Let's shift our stop loss higher, right? You can see that we are still in this trade. Why? Because the market has still not closed below this level over here. Now we have this candle over here, right? It has closed slightly lower, right? But our trailing stop loss right now is at this previous candle low, which is this over here. So if the market closes below this purple line, only then will we exit the trade. Okay, so you can think about this, right? As long as the new candle, the next candle has already started trading, it has opened, you can actually start trailing your stop loss on the previous candle, right? So for example, this one over here, your previous candle will be this this bar over here, and this is the low. Okay, this is the low. So if the market closes below this low, you would exit your trade. So right now the market has closed lower again, but right now this is the previous candle low, right? So you have you can see that you are shifting your stop loss higher. Right, this red one over here now is the previous candle low, so you can shift your stop loss to somewhere here. Okay, the candle now has closed higher, so the previous candle low is this candle over here, this small candle, so you can just shift it slightly. Right now the market has gap somewhat higher, and the previous candle low is this over here, so you can shift it lower to somewhere here. Then it closed higher, right? You shift your stop loss towards the previous candle low, right? Shift it to the previous candle low. Shift it to the previous candle low. Shift it to the previous candle low, but this time around it's slightly lower because it is a wide range candle. Okay, then over here you exit the trade. All right, why do you exit? Because right now, by right, your stop loss should be somewhere here, the previous candle low, and the market right now has actually closed below it, and this is when you exit the trade, right? So this is how you can actually use this previous candle low technique to trail your stop loss, right? There is nothing magical about using the previous candle low. You can also use the the previous 2 candles, the previous 3 candles, whichever you prefer, right? It all boils down to how comfortable you are in trailing your stop loss, right? How much breathing room you want to give it, right, in the hopes of letting the trade reach your eventual target, right? So this is one technique that you can use, right? Basically trailing your stop loss using the previous candle low, right? You can use the previous 2 candles or the previous 3 candles, but in this example you can see that even if you trail your stop loss using the previous 2 candle or the previous 3 candles or whatever, you would still get out of the trade, right? Basically they have the similar exit for this trade. Okay, so with that, right, I wish you good luck and good trading, and I'll see you in the next video.